So as you've mentioned, first day pop of 25%, really impressive. I think Masayoshi Son, SoftBank, everyone at ARM will be extremely happy with the results. So after first day of trading, ARM is now valued at around $65 billion. So that's not very far from the valuation that SoftBank gave when they acquired the remaining stake from the Vision Fund, as well as the failed deal to be acquired by NVIDIA a couple of years ago, which was valued at $66 billion. So as you can see, there's quite a different tone with regards to the market as compared to if you cast your mind back maybe last year when SoftBank first floated the idea of listing ARM, because it seemed that SoftBank was really on the ropes when they were offloading the stake in Alibaba and also listing ARM. So the tones in the market has changed substantially. You can say that ARM is very richly valued, and I guess investors are baking a lot of the future growth opportunities on data center, on AI, on automotive, and potentially also a change of business model from a more royalty-based system. So investors are extremely bullish, as you can see from the pop, and it's the rest of. Well, we need to see how if ARM can execute their strategy on these three pillars that I've mentioned.
Indeed, and execution is key here. So what does ARM need to do to meet some of these growth expectations, and where are the opportunities for the business?
Right. I think firstly, AI, as you've seen from the clip from Masayoshi Son a bit earlier, really Masa wants to position ARM as an AI company, and I guess some of the projections that ARM has been giving to investors, such as growth of mid-20s by 2025, is based on the projections out of data center and AI business. Currently, ARM only controls about 10% of the market, so there's still a lot of growth, and also looking at ARM's technology, hyperscalers, chip companies need to add more computing power in the age of AI. And as you put more processor cores into the systems, ARM can charge more per chip. So that is definitely one growth area. But on the other hand, right now, all the hype is on AI happening in the cloud or in the data center. But we know ARM has a really unmatched superiority in devices that are powered by batteries in terms of power efficiency. So if there is a case that AI happens more on the device, or what we call edge computing, ARM can really reap the maximum gains, because it is almost totally dominant in anything that's powered by a battery. And there really could be a demand for AI on devices, because not every system needs to run large language models. Smaller models could happen on devices with improved privacy and security. So this could really be a growth area for ARM. Just on this on similar topic, automotive, as Rene Haas, the CEO, has mentioned, automotive obviously is a booming industry, and as autonomous driving increases, as electric vehicles proliferate, more sensors and processors are needed per vehicle. And as there will be more communication between vehicles and data centers, there will be more chips that are needed on cars, and therefore more computing power. So again, a similar argument for ARM: more chips, more processing power, more ways for ARM to put its technology blueprint on the industry and on the devices we use, and therefore they could reap more revenue from all of these new technological developments.